Welcome to Learn Wealthy, your go-to channel for real estate insights, market charts, and golden opportunities.
Hey everyone, welcome back to your channel, Learn Wealthy. My name is James Santiago, and I'm a realtor and own some rental properties here in the Houston area. Today, we're diving deep into the Houston real estate market for your latest update. Whether you're buying, selling, or investing, staying on top of the latest trend is key, especially with the changes we're seeing in the market. So let's go over what's happening with home prices, inventory levels, days on market, and more. And as always, if you find this video helpful, don't forget to hit that like button and subscribe for more real estate updates. Let's break it down. The current state of the Houston real estate market. Let's start with an overview of the market. Currently, we're seeing inventory levels rise with around 3.5 months of supply, which is up from earlier this year. This uptick is giving buyers more options. The average days on market has increased to around 50 days, so homes aren't flying off the shelves like they were a year ago. However, that's a good news for buyers who need more time to make decisions. Now let's talk about home prices. The median price in Houston is around $345,000, which is up slightly from last year, but growth is slowing. We're seeing more and more price cuts across the board. Around 30% of listings have had price reductions recently, and this trend is more common in the suburbs than in urban areas. If you're a buyer, this is a great opportunity to negotiate, especially with sellers becoming more flexible. Sub-market analysis. Let's break it down by some of the most popular sub-markets in Houston. Starting with Cypress, which is experiencing a whopping 15% increase in inventory. It's one of the areas where price cuts are happening most frequently, and homes are staying on the market a little longer, averaging around 45 days. Katy is another hot spot, especially with new developments. Inventory here is up by about 12%, and homes are spending about 50 days on the market on average. We're seeing price cuts at about 25% of the listings, so buyers are gaining some bargaining power here too. Over at the Heights, inventory remains low compared to other areas, with only about 2.5 months of supply, making it one of the most competitive sub-markets. Days on market is still under 30 days, and we don't see much price cuts here, affecting only around 10% of the listings. If you're buying in this area, be ready to act fast. I hope you don't have diabetes, because the next one is Sugarland. Sugarland continues to be a family favorite with 3 months of inventory and an average of 40 days on market. Prices are holding steady, but we're seeing about 20% of homes going through price reductions. And finally, Pearland. This area is where your wife's boyfriend meets with your wife. Just kidding. Pearland has been benefiting from its proximity to the medical center, and inventory here has grown by 8%. With homes sitting on the market for about 47 days. Price cuts are happening on about 22% of listings. Commercial real estate and the Houston economy. Switching gears to the commercial real estate market, we're seeing some divergence here. The office sector is still struggling with high vacancy rates, especially in downtown Houston, due to the ongoing shift to remote work. However, the industrial market is booming, driven by demand for logistics and distribution centers. Houston's location and infrastructure make it ideal for these developments, which is a bright spot for commercial real estate investors. And let's talk about the Houston economy. As one of the most diverse economies in the country, Houston is bouncing back. The energy sector is showing signs of recovery with oil prices stabilizing, which is good news for local employment and consumer confidence. Or maybe it's just because it's election time. But the labor market is still feeling the effects of rising inflation and higher interest rates, which are damping consumer spending. With mortgage rates still elevated, hovering around 6.5% for a 30-year fixed mortgage, which is historically average, but put that along with these home prices plus wages not keeping up with inflation, as a result, affordability remains a challenge, especially for first-time home buyers. The Fed's recent 50 basis point rate cut is supposed to soften things a little according to what you hear on the mainstream news. So Your mortgage brokers and realtors may tell you to buy now due to interest rates are about to drop. But if you watch one of my previous videos, I explained that the Fed rate cuts don't necessarily mean 30-year mortgages are dropping. To wrap things up, the Houston real estate market is definitely cooling. Buyers are getting more options and price cuts are becoming more common, giving you room to negotiate as a buyer. Sellers, on the other hand, need to be realistic with their pricing and may have to wait a bit longer to close a deal. And investors, keep an eye on the suburbs and the booming industrial market for your next move. That's it for today's Houston real estate market update. If you enjoyed this video, hit that like button, subscribe for more insights, and drop a comment below with any questions or what trends you'd like to see next. If you need a real estate agent who's also an actual investor, landlord, and studies macroeconomics, I'll put my email down below. If you want to learn why 30-year mortgages don't necessarily go down when the Fed cut rates, click the link on the screen for the next video. For more finance, real estate, investing, and macroeconomics, let's all learn wealthy together.